We are currently on the verge of a financial and regulatory revolution in the cryptocurrency space that has never been seen before. The Securities and Exchange Commission's Cryptocurrency Enforcement Section has been officially defunded by Congress in a stunning bipartisan vote of 412 to 3. This action essentially deprives the SEC of the authority to carry out its ongoing investigation of Ripple Labs and its XRP coin. This heralds the start of a new era in the integration of blockchain technology into the U.S. financial system and signifies a dramatic change in the regulatory environment that has limited XRP for years. This vote has immediate and significant ramifications. There is no reason to speculate as to why the SEC's action against Ripple was dismissed. It is anticipated to take place within 24 hours of this ruling taking effect. This implies that the legal ambiguity that has plagued XRP will dissipate, paving the way for XRP to be acknowledged by U.S. law as a completely valid financial instrument. The secret to releasing XRP's full potential and enabling it to operate as legal money is this kind of legal clarity. The legal triumph coincides with the activation of the $1.2 quadrillion ISDA derivatives contract, which had been pending regulatory approval for a long time. XRP is a key asset in these derivative settlements for this enormous financial contract, indicating hitherto unheard-of institutional support. Trillions of dollars in transactions will be made possible by the unlocking of this contract, which will also establish XRP as a vital infrastructure asset in the world's financial systems. The trust of institutional investors is also directly impacted by this congressional vote, especially for behemoths like BlackRock. Because of regulatory uncertainties, BlackRock's application for an XRP exchange-traded fund has been on hold for months. Regulatory obstacles disappear with the dismissal of the Ripple litigation and the defunding of the SEC's crypto section. Institutional capital is now able to invest in BlackRock's XRP ETF because it is currently on an expedited road to approval. Since $10,000 per token is a modest estimate based on supply-demand dynamics, the inflows anticipated from this ETF alone have the potential to drive XRP's price to previously unheard-of heights. Why precisely $10,000? Although this figure may appear audacious or even outlandish at first, it has a strong basis. Rapid institutional acceptance caused an unexpected supply shock, which holds the key to the solution. Together with XRP's extremely constrained circulating supply, major companies are joining the market at a scale never previously seen. Demand will go far beyond what the existing supply can manage when you take into account the involvement of banks and investment funds as well as the unexpected requirement for large quantities of XRP to settle derivative contracts and enable cross-border transactions. This rise is supported by tangible legislative action, clear regulations, and strong institutional commitments, which makes the $10,000 price objective not only sustainable, but also, in many respects, completely warranted. This is not simply another speculative bubble by the current state of finance. Beyond the short-term effects on the market, this landmark vote represents a fundamental change in the way the U.S. government views digital assets and blockchain technology. The shift in focus from policy to a fundamental shift in mindset indicates that policymakers are starting to see how blockchain may revolutionize the economy, banking, and even public services. An environment of doubt has been established for years by the SEC's vigorous enforcement activities, making it challenging for entrepreneurs and innovators to establish and invest in the sector with confidence. The U.S. is at risk of lagging behind in the global blockchain race as a result of this regulatory ambiguity, which has inhibited both innovation and broad adoption. Congress is making a strong and unambiguous statement by cutting off money to its crypto enforcement arm. A new chapter of possibility is dawning, marking the end of the period of fear and repression. The future is now in the careful integration, well-balanced regulation, and widespread adoption of blockchain technology, opening the door for cross-industry innovation, cooperation, and expansion. Ripple's network and technology stand to gain a great deal from this new setting. Now that legal barriers have been lifted, Ripple can expand its alliances with banks, payment processors, and governments around the world, while speeding up the rollout of its payment and settlement networks. Because of its intrinsic benefits, such as lightning-fast speed, low cost, and scalability, XRP will become the standard digital asset for managing liquidity and making cross-border payments globally. Broadly speaking, this vote might spur legislative initiatives to further elucidate the legal position of cryptocurrencies, support blockchain innovation, safeguard investors, and encourage responsible growth. The United States will remain a leader in the digital asset economy, if more laws and regulatory frameworks are developed that expand on this example. The timing is ideal from the investor's point of view. The market is finally exhibiting indications of a significant change following years of expectation and uncertainty. Opportunities that were previously purely speculative are now becoming real for investors, which has rekindled their enthusiasm and hope. After years of regulatory uncertainty, retail investors who kept XRP are now poised to enjoy an exponential growth in their holdings. As the value of their investments soars, their perseverance and patience are being rewarded, and many are feeling validated for their sustained dedication to the asset. Market capitalization will rise into the trillions as institutional capital enters the market, bringing stability and lowering volatility. The market is changing quickly due to the entry of major financial companies, drawing even more interest and trust from both new and experienced investors. By combining the advantages of blockchain technology with the dependability of regulated financial instruments, a new class of asset is created. A stronger, more open, and more accessible financial ecosystem is the end outcome, creating opportunities for global innovation and expansion. Although there is a lot of hope, there are still obstacles to overcome. To manage XRP-based transactions at scale, banks and other financial institutions need to quickly modify their infrastructure. The Treasury Department and Federal Reserve, among other regulatory agencies, will keep an eye on and influence the changing ecology in addition to the SEC. Nonetheless, XRP and its supporters are clearly in the lead. It's also important to note the political background of this vote. The decision's bipartisanship demonstrates a unique consensus regarding the necessity of updating America's financial regulatory system in order to maintain its competitiveness on a worldwide scale. This historic legislation was advanced in part by the power of lobbying, economic factors, and technological necessity. As Ripple's legal status is formally announced, and the SEC's action is dropped, the next 24 hours will be crucial to observe. Markets will respond quickly, and we anticipate a spike in the price and volume of XRP trade. The ISDA contract will be finalized, and BlackRock and other institutional players will make their announcements, establishing new benchmarks for liquidity provision and derivative trading. In conclusion, the resounding decision by Congress to defund the SEC's crypto division and dismiss Ripple's case is, quite simply, a historic turning point. This action will allow XRP to become legal tender, open up enormous financial flows, and indeed raise its price to around $10,000. This is not some far-fetched potential. Rather, it is a quickly becoming reality supported by strong institutional preparedness and legislative action. XRP has evolved into more than just a cryptocurrency. It is now a crucial component of the future digital financial system. We appreciate your participation in this in-depth analysis of the most recent advancements. Please like, subscribe, and share your thoughts in the comments section below. If this update made you realize how serious the situation is, what do you believe will happen to XRP and cryptocurrency regulation in the US in the future? As this story develops, keep checking back for more coverage. Disclaimer: this movie is solely meant to be informative and instructional. It isn't financial guidance. Before making any investing decisions, please conduct your own research and speak with a financial advisor.